Welcome to Betweenplays Stock Market Strategies. And with us today, analyzing the venture market, we have Alaina, Beland, CEO of Bid Capital and Fine Wines. How you doing, man?
Good morning, Albert. How you doing this morning?
I'm doing great. I noticed that you put your key name over here, the Bid. I love it.
Yeah,
Um,
well, that's what they call me, right? We said in the last episode, and we got to keep it like that. So
let's keep it real. Let's
yeah.
keep it real. People call you the Bid. Let's call you the Bid. All right.
So
So
Albert,
yeah,
before we start,
go for it.
like you say at the end, do your research, prepare, plan, and execute. And in every venture capital, that's what it's the most important thing is doing your homework. So you got to do your research, do your due diligence, prepare yourself, have a plan of execution, and then go on it. So let's start this way this morning.
That's awesome. Honestly, that's awesome. That is our motto here. That's very cool that you bring that up. I really appreciate that. That's awesome. And on that note, Alain, the Bid, let's look into something here, because we're analyzing the venture market, which is really important. But I think that's also very important that we should be looking at other ones. I know there's an exchange that just came out recently that we won't get too much into, but let's look at the which is the neo market. So for all you out there, we will talk about that eventually. But between the CSE, the Canadian Stock Exchange, and then we have the venture markets, venture exchange, and then we have the Toronto Stock Exchange. Could you just get into a little bit of what's the differences between them?
Differences is more probably if you look at the between the CSC, the venture, and the Toronto Stock Exchange. Well, the Toronto Stock Exchange is more of senior exchange. It's been there for so many years, and it's more the big capitalization, the banks, the big large caps are on there, and the regulations are more strong on the Toronto Stock Exchange. And when you're looking at the venture was comprised, I think, I think it was the Alberta Exchange, Vancouver Exchange, Montreal Exchange, just merged all together and became the Venture Exchange, which was more the little smaller cap, micro caps, more the risky companies, and more maybe that's where I look at the gem, because that's where you're trying to do 5-10 fold on companies compared to the Toronto Stock Exchange, more traditional large caps that will give you a good dividend, maybe more money in the treasury, bigger projects. So, and then there's the CSC that came upon. I don't know if it's 5-7 years ago, because with this pandemic, we don't know how many years it's been.
It's
Because
true. Being
there's
locked.
2 years that
That's right.
we
Being locked
forget.
up 2 years of our
Yeah.
lives, we lose track of time.
Yeah, exactly. And the CSC was a bit to compete with the TSX venture, because a lot of companies wanted to go and they didn't have the funds to go on the venture. And at the CSC was that was more easy to go on with the laws, the regulations was easier to go on. If we look at just the marijuana space, most of the companies were on the CSC, then went to either the venture, then went to maybe the Toronto Stock Exchange. But CSC was easier. They don't ask for as much for companies to get on it, and I think the fees are much less. And that's why at the beginning it was it was an exchange. A lot of companies went on it because the volumes weren't there. But as the years progress, it's a very sustainable exchange. It's an exchange that's very competitive and cheaper to the venture exchange. So a lot of companies now, they look, when there's not money out there, harder to find finance companies. Well, they'll look at alternatives that it costs less for them to get on. When you talked about the Neo, I think it's a couple of years I heard about the Neo. I don't know a lot of companies on it. I think, and I gotta verify again, but the Neo exchange, I think, was done just so there's no more algorithms, less people like exchanges is more direct, more probably institutional buyers and sellers, and also maybe how can I say, retail investors are more astute to the trading and not having different all like algorithms. And if you look at the venture exchange right now, there's you could go and trade on 11 different alternative exchanges, which is not fair for someone that doesn't have all the exchange. So you see a bid and ask, but you don't see all the algorithms behind it. And I think this should be, the regulation should look at that, because it's not fair for every individual, you and me, retail investors that don't have all those tools to see at all the algorithms, all the other exchanges.
That's so
So
interesting Alain, that's very interesting that you are bringing that up, because we are moving now into a different, and I know that this is still on topic, but like off topic, on topic type thing. I was listening to other, other, let's say like SEC, bodies. I was listening to other, not corporations, but institutional
yeah,
bodies talking about sort of what you're mentioning now, which I find really interesting, because what they're saying is that they're trying to move away from the, like the whole, buy the rumor, sell the news. They're looking
yeah,
to when a company has good information, or they put something out that is like, positive, the stock shouldn't be dropping. The stock should be going up. So what you're saying is very interesting about the exchange, which we could probably look at that more in the future. But I think that with 2020, with all the people getting on, retail investors getting on, learning about the markets and flooding the markets with, I don't know, millions, billions, just flooding the markets, people getting on from all over the world, because it's just become so easy now for anybody to just say, I want to go and put money in that company. So I don't need to go get a stockbroker. I don't need to. Yes, it's good for if you need some financial help and whatever, but if you have done your own research, you've prepared, you planned, you executed, right? You do it, and you listen to yourself. And if you do need a financial planner, you do go get one. But the point is that it seems like the future of exactly what you're saying, they're looking to have more algorithms that are more fair and to the retail investor as well, because the institutions have stuff that we don't have, that we can't see. And at the same time, now they're looking to put things in place to stop this, buy the rumor, sell the news, and all this kind of stuff. So you're bringing up really, really great points. And I think that with that, we should look at a little bit of risk, because risk plays into all of this, what we're saying.
yeah. Because just to give you an example, sometimes you get somebody calls me on either any company that I could be representing, or any company that they want my opinion. And then they go, so I give them my opinion. Then they call me back. They go, I went and buy it. It went true, but I don't see it on the exchange, and they're wondering what happened. And so I go, well, you went on an alternative market, and the people are like, what do you mean an alternative market? So it should be regulated that there's one exchange easier. If institutions wants to do trading out of like the normal market, so there's blocks to sell because they're going for one account to another, they could go on these other exchanges. But having 11 to 12 exchanges, and it's like people wonder what's going on. And these algorithm, it's computerized, so you could
Yeah.
program that you're gonna, because it costs them nothing to go in, out, half a penny, they're making money, or zero, they're not losing money. So,
Yeah.
and some of these traders, they get paid to do these. Algorithms. So it's not fair for the just Monsieur Tout le Monde, like they say,
Yeah, for
retail
everybody out
investor,
there.
for
Yeah.
everybody out there, because they don't understand. And like you say, right now you get to some. like you don't want to do a business with a broker, not because the broker's not doing a good job. It's because you got some platform. It's costing you zero to buy, zero to sell. So you could go flat on a trade,
Yeah.
get out of there, and the guy's happy, and
Yeah.
like he did his homework. It didn't work, but he didn't lose money on a trade. As a broker, you'll get a good broker, and he'll charge you minimum $100 or 75, $95,
Yeah.
$100, and that you're lucky.
Yeah.
So, but brokers are, if you don't know what you're doing, it's good to have a financial planner or a broker, especially a broker that knows the industry, knows the markets. At least he could, it's like helping you out, because with
Well, that's
now with the crypto markets
oh,
and all these young people, they buy, sell, buy, sell, buy, sell, buy, sell. While, they're doing so many trades, small trades, and they're not there for a long time. And if they're not, if the exchange would be regulated, that there's only one exchange, it'd be easier to see where the real prices are, and it's not algorithms that control the prices of the stocks.
yeah, I see what you're saying. I mean, when we're talking about algorithms, we have like one of the biggest AIs, artificial intelligence, out there for BlackRock. BlackRock
Yeah,
is like,
yeah,
trillions of dollars in assets, and their AI is just phenomenal. So, but Alain, when we talk about these different types of markets, all right,
yeah.
risk. When I'm looking at risk, you know, does one exchange, is and one exchange better than the other when I'm looking at risk?
Well, risk, you're right. Like risk in the exchange, it could go up, it could go down. It depends of the bids, of the ask, how much. Of course, when you're in a senior market like the Toronto Stock Exchange, I think that the homework has been done by institutions. Everything, the risk is diminished. But it doesn't mean that you don't have a company that's on the venture, on the CSE, that has a large market cap. I remember when I was a broker, I had this company called MTY Food Group that was, I did a trade to get a block out of that stock at 50 cents, because we're getting they were in the technology, and then they started the food in the shopping malls. And I crossed when I was a broker at 50 cents, 500,000 shares in my book. Stock went to $60, and it's dollar giving a dividend. And it was on the venture exchange till about what, 30, 40, $50. And when it went to the Toronto Stock Exchange, because it costs you
Wow.
more when you go to the senior exchange. So not all companies have the money to go on the senior exchange. But when they went, it's because they had institutional holders, institutional were putting pressure because funds were coming in, and they were saying they wanted, it would be better if the company would be on a senior market. And they finally went on, but from 50 cents it went to 40, $50, 40 something dollars, before they went to the Toronto Stock Exchange.
Yeah.
So I think, yes, when you get to the venture and the CSE, yes, those are more micro caps, micro caps, companies that has ideas, that want to go on the exchange, because companies, they go on the exchange because funding, they need money. It's easier sometimes to get money on an exchange than doing it privately, because at a point friends and family have so much money. But that's why they go to exchange, so they could put it to the whole out there, to everybody out there, and it's sometimes easier to get. So yes, CSC venture, micro caps, more risk, like, and less compliance. And then when you go to a senior exchange, Toronto, well, more expensive, more compliance, more funds will feel comfortable because you went through all the regulation to be on the Toronto Stock Exchange.
Okay, so I see. So okay, that makes a lot of sense. But to be fair, we always should be looking at the financials of a company because um, even though we've diminished the risk, like you're saying, because all of that makes absolute perfect sense. Why would you, and the institutions are there, so all this kind of stuff. But for an individual company, because I guess that's globally, and that's the macro environment of the exchanges. But when it comes to individual companies, is there less risk for CSE, a venture, or a .to? I mean, like, yes, we've diminished the risk
Yeah, diminish
globally,
the risk.
but
Yeah, because yeah,
should we always be doing our work, our
always,
research?
always, always, always. Because listen, you know, you never know. You get a company. We'll take a company that was in Africa. You know, a gold company. It was a Quebec company. Semaphore was in Africa, and then you know, the stock was $15 and doing everything was well. Bombardier, when 9/11 happened, they went destroyed. You know, so they were on senior exchanges, but you'd never know what could happen in the environment. If you take Semaphore as an example, well, Africa was dangerous, and then they got, you know, they're trying, you know, their people needed money, so they're coming, the army is coming in, and they're you know, shooting the employees and or
Yeah,
stealing
yeah.
employees.
Wow,
You can't, that's
wow.
political risk. You can't do anything. Bombardier, 9/11 happened, the stock was $15, bang, goes to $1, $2, never recouped since then, you know what I mean?
Yeah,
So, and they're on the Toronto Stock Exchange. Those are things that happen, geopolitics. There's things
yeah.
that happen in the world that you can't control. So there's always a risk whenever you go into the market. You
So,
can't say there's no risk. Any market, there's always a risk to buy and sell. And what is your tolerance to risk?
oh, I
If you
like
don't
that.
have a high tolerance of risk, don't go too much in the market, because you know, the market is like a pyramid. It's like a casino. It's like you know, there's you buy, and then I'll buy, and then there's another buyer on top of us, and it's going to move up and move up, because their companies are, they're good companies, but it's still like, you know,
Yeah,
pyramid, you know what I mean?
yeah. I see what you're saying. It's a form of well, I say, yes, a circular pyramid,
Yeah, yeah, yeah,
if we could even
exactly.
say that.
Yeah, in
Um,
a way.
yeah,
Yeah,
because it's sort of like, it's some
yeah,
kind of circular thing where money's flowing in and then money could be flowing out.
yeah.
So
So
yeah, because
that's
there's
why
not
that
always a winner on top, right? I mean, we
no.
can, yeah. So yeah, so
What's the highest price? You know, the highest price when there's a takeout and there's the price and that you get your money. That's a lot of guys, especially in the mining industry, when you're buying a company that you're looking for a project that probably is going to be taken out by a major,
yeah,
and that's where you got the high. But you know, how many people do you know that bought the low and sold the high? I don't know. In my career, I don't know. I maybe know one guy because he got lucky in his mom's account, and he put some shares, and the stock went to this price. He hit them for a portion, and then the stock collapsed, but he had hit the high. And we laugh about it when we talk about that. And he's a president of a company called Darien Phosphate. That's a very intriguing company, also.
oh yeah,
Yeah, yeah,
okay,
yeah,
that's interesting.
yeah.
Um,
So just you know, it's always wondering what's your risk, what's your tolerance, and how much, like, how much you want to risk. You know, you have, I don't know, you have a portfolio of whatever amount. Well, how much are you ready to risk, either in high risk companies, which could have a high return, or you could lose it all, or in a companies like gold banks, gold companies, banks, you know, insurance companies. Uh, you decide what your tolerance of risk is, and that's why financial planners are, and that's why brokers are there for you.
yeah, to aid in diversifying your
Yeah,
portfolio when
diversify.
people
Yeah,
when people
yeah.
don't really know what they're doing. Yeah, absolutely, absolutely. And so your gems that you mostly look for is on the venture market.
Usually during the venture or the CSE, usually it's companies that will, like I said before, will call, either got a cold call or somebody heard of me and he wants to know my opinion, wants to know if I could help them out. I'll look at the management, look at the project, look at the capital structure. Capital structure is very important from the start, and try to do my due diligence. Like you said, do your homework, do your due diligence, you know,
Yeah,
plan.
yeah,
So I try to do that, and sometimes, we're not divine, and we're not. We can make mistakes. Everybody
Oh
makes
yeah. Oh,
mistakes.
100%. Yeah, it is a
You
stock
get a
market.
yeah, no, but you get a good salesman that really tells you a good story, and he puts you to sleep, and you really get you get involved, and maybe you shouldn't have, but
Empties your pockets.
we're all human beings, and
Oh yeah.
that's
Well,
what's
like
important to know that.
we're all trying to make money, and now with the inflation going up and everything like that, we're trying to make more money, but the stock market isn't listening, so it's not very
No,
good.
it's harder.
you know,
Yeah, it's harder. It's
yeah,
harder.
the long-term bonds, the cryptos, we're the market, the real estate, everything is in dire straits right now, and
Yeah.
it's not looking too good with inflation creeping up, and then having another 0.75 going up on the interest rates. Oof, I mean,
And
hopefully
then if you listen to the Fed yesterday, they're talking about another 125 basis points from the next two meetings. So, you know, uh,
it's not looking good. I mean, I've been hearing people they need this market to crash even more to bring it around 2007 levels in order to aid in stopping the inflation rise. I don't know if that's because they get money back or whatever.
no, you're talking
It,
about the Standard and Poor's.
yes,
Okay, okay, yeah.
yeah,
And so that's why tolerance of risk, right? If you have a good company, yes, it's moving down, but is it still well capitalized? Is the projects start going? You know what I mean? In any sector. Yesterday, I was talking with a company, Evergen, EVGN, and stock is at 220 on the venture, and they have 17 million in cash. They're going to be a bit positive this year, 3 million a bit positive, uh, and they have only not even 14 million out. They have an issuer bid that they're buying back their stock. Why is people selling? That's panic. It's panic.
it's panic.
But
Evergen, that's
that's
a gas
why
and oil
some,
company, right?
yeah, renewable energy,
Renewable, so
renewable
gas
energy.
and oil and renewable energy.
It's
Yeah,
more renewable energy. Yeah,
more
renewable.
renewable energy. Okay,
Yeah, yeah.
okay.
But so you're saying, why are people getting out? And it doesn't make sense, because if you look at the capitalization with the cash they have and the revenues they're making and the bit that they're going to make, and there's new projects coming on board, and they're well capitalized, why is people selling? That's when I say there's panic in the market,
Oh yeah.
and you could find really good opportunities right
Oh yeah.
now,
Right now, yeah.
and it's time to do your homework and put some money at risk in these really good companies that will survive and could maybe do two, three, five, 10 times your money.
And that's
You know?
because it's mostly in the venture market. That's why
Yeah,
you like the venture
yeah,
market.
exactly,
Uh,
exactly.
I have one more question before we end off the show, and because I know that in the next shows we're going to get a little bit more into technicalities, maybe some keywords, and educating the public on certain keywords. And recently, we have a company here. You spoke to me about this company a while ago, and I just kicked myself in the head not having the funds to have been able to transfer it into there because I was stuck in the cruise lines because I went overweight. And this company was the ticker symbols PMET, PMET, Patriot
Yeah,
Battery
yeah,
Metals. Now, they just signed a 20 million flow through agreement. Okay.
yeah,
So, and this is where I would like to start off for the
yeah.
next future shows.
Yeah,
And
that was a it's a charity flow through. That was a
so,
very very interesting question,
So,
because
so wait, let me just ask you a question. For a lot of people out there, they might see the 20 million, that they get this 20 million, there's an agreement, everybody's like, woo, 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 woo. But to some people, they might not know the key word here, like flow through.
yeah.
So it's very important that we understand the technicalities of what that exactly means. Can you explain to us what a flow through agreement means and how this will help increase the value of Patriot Battery Metals?
Okay, so flow through financing, it's mostly you have it in the oil and gas or the mining industry. This in this case is the mining industry in Quebec. When you're doing a flow through, is that you're giving the people that are buying this flow through credits that they could get up to maybe 30. Their real cost will be about 33 to 40%. We'll have to talk to a fiscalist to tell us how much exactly it would cost, especially in Quebec. But that money that is raised has to go in the ground. So it's money that will be raised, and it goes to do drilling and do field work to get the project even bigger or work on the project. So flow through like they did, I think they had 109% premium
Yeah,
on
it's
the
like
stock price.
$13. I don't remember. I'm just rounding out.
I think it is 13 something, was 109%
Insane.
premium. So they're gonna issue only $1.5 million, 1.5 million shares at a price of $13 some odd cents, which was 109%.
All right, everybody, if you really like that show and you see the direction that we're going to, that will be continued on our next show. We will be deep diving into companies, the meaning and terminology of certain things. Believe me, there's so much more to come with analyzing the venture markets with Alain the Bid, Beland from Bid Capital and Fine Wines. Always remember, research, prepare, plan, execute, stay strong, and on to the next show. Hello, everybody, and welcome to Betweenplays Stock Market Strategies. Hit the like and the subscribe button. Head off into our description below if you'd like to know where all of our social media links are, and also the podcast, whether it be Apple or Spotify. We will be doing interviews with CEOs, with analysts, and it's not only on the stock market itself, but also on cryptocurrencies and blockchains. We will have guest speakers. We will be doing panels. You will be able to enjoy a lot of different content. Have a great day, and always remember, research, prepare, plan, execute. Stay strong.